Me. So for those who aren't aware, those who haven't heard of it, can you just explain what the dental market review is?
Yeah, certainly. Good morning, Seb. The dental review is based upon the information that Christie Co gather from the market. That includes our transactional data for the practices that we're selling. That can range from single sites to large portfolios. Our valuation services team who provide formal RICS valuations, and both of those two components combined also assist with our consultancy team who do buy side and sell side due diligence. They've been responsible for supporting some of the theses for private equity buyers coming into the marketplace. So combined, that's created more than 100 million data points for consultancy. So the review that we create tries to capture whole of market. I know that can be difficult at times, but we wanted to focus on the single sites that we're selling, the larger transactions in the marketplace, and also just to see the general sentiment in the marketplace coming from operators, coming from buyers, and some of the testimonials from sellers as well, of course.
Of course, yeah. And reading through the review, it does seem positive. Why do you think dentistry is so attractive for investors at the moment?
Yeah, good question. I think it was definitely following on the back of the trends that we've seen on the pandemic. Healthcare in general was emphasised significantly. Oral health falls firmly into that camp as well. I think when you look at the private sector just now, one of those trends that's emerging is private dentistry is absolutely booming. This is not necessarily because of NHS access issues. In fact, far from it, because when we track those private practices that are performing very well just now, that's not NHS treatments that they're doing, it's high-end cosmetic work. And as a direct result of what we're doing just now, the Zoom boom, people more aware of their self-appearance. They've not been on family holidays, although this year certainly looks as though that's bucking the trend. And therefore the accidental savers had money to spend on themselves. Conversely, the NHS at the moment gets a bit of an unfair bashing, I think, at times. I think when we look at the core private market, yes, it's very appealing, and it's fantastic to see. The NHS market still has a very much a stronghold of favourable investors, those who look at the NHS and see it as a desirable place to invest and deploy capital to grow good portfolios. I think the message can be mixed ever so slightly when we see those who are rallying for improvements in the NHS. It's simply that. It's not to remove the NHS, it's to improve the framework. And look, I think I know ever the optimist, but the changes that have been kind of rumbled on for a while and suggested for a while might come to fruition over the next couple of years. So those who are building small groups just now are diversifying. They're creating a kind of broad range of core private practices, good mixed NHS practices, and solely NHS practices as well. I think that'll allow those portfolios to be agile and in as best shape as possible when there are any changes in the market or within the industry.
Okay, and just touching on those smaller portfolios, but also the wider corporate landscape. In the review, it seems that there's record levels of merger activity from the corporates. What do you feel is driving this activity, and specifically, what is the activity? Are they just shifting practices, churning through practices, or are they targeting certain practices? What's driving it?
Yeah. I suppose, first of all, there's a misconception in the marketplace that the majority of activity is coming from corporates just now. The positive trend that we see is independent operators. That can range from first-time buyers to independent operators buying their second, third, fourth, fifth sites, so growing portfolios, are the ones that are really active in the marketplace, pushing those boundaries quite considerably. the corporate consolidation is happening at the top slice of the market, and those tend to be practices of high quality and scale. They can support an associate-led model. The economies of scale work for those types of practices. And arguably they were fantastic practices pre-COVID. They've become better practices now. The operators of those practices have become more aware of the business of dentistry. Whilst patient care is still paramount and that's kind of number one focus, they've been agile and adapted those businesses to be able to work in this kind of marketplace. They've been marketing those businesses differently and try to capture the patient demand that's there. So the corporate consolidation for those types of practices is really quite encouraging to see. Again, in terms of the activity there, long gone are the days where we see a traditional, what I would describe as a traditional vanilla trade deal or corporate deal, where typically if a practice is valued at £1 million, say, and a corporate suggests we'll pay £1 million and we'll defer 30% of our offer for a 3-year period of time. There's a turnover target for the seller to achieve, so the seller's tied in, and for every pound shortfall on turnover target, a pound is claimed back from the deferred amount, a pound for pound clawback. But that's effectively a vendor, a seller there giving a vendor free loan. It's not that exciting anymore. And I think when you've got someone who is selling, but they still very much enjoy dentistry, they don't necessarily enjoy the compliance part, the bit behind the scenes, the operational side, the running of the practice. But if that headache, let's call it, is taken away from the practice owner, and there's a seller there who's doing what they do best, running the business and enjoying the day-to-day dentistry, there should be, and some of the deals that we're negotiating, upside rewards. So as the business improves and overperforms, there's enhancements in that type of deal as well. There's compounded interest on any deferred amount. There's an equity share in the business, for example. So both the buyer and seller get the benefit of the sale and acquisition.
Okay, that's interesting. And you mentioned the Zoom boom, and the last 18 months have certainly seen a growth in revenue for some practices, which has obviously been particularly positive. It's also reflected in dental practice prices. Do you see this continuing? Like you mentioned, people are going back on holidays now. So do you see this growth continuing?
It's a question that we've been asking a lot of operators. And look, I think they're more self-aware of their own business and portfolio than ever before. The clear message that's coming from those operators is that this bubble's not going to burst. Private dentistry is here to stay. I saw a very interesting slide a number of months ago. It was comparing Britain to other parts of the world, other countries, where average private patient spend versus other places around the world. Britain sat at the very bottom, and yet we are talking about the benefits and the enjoyment that those practices are currently having. So I feel as though when you look at or compare elsewhere in the world, there is still scope for further growth there. I think whilst there's a bit of flux in the NHS, yes, there's an enhancement in that private sector just now. But I think it'll recalibrate, but private dentistry and cosmetic dentistry is here to stay. Okay.
You also make a point of the recruitment crisis in the review, and how the recruitment environment has deteriorated over recent months. Do you feel like this has plateaued now? It can't get any worse, or do you think this is a cause of concern for practices in the future as well?
Yeah, I hope it doesn't get any worse. I think that's something that every sector is feeling just now. So there's almost kind of comfort there that it's not just contained to the dental market. Every industry, every commercial industry is feeling it. It doesn't feel as though it can get any worse. And I think whilst there's so many kind of talking about how we can improve this, and the kind of rallying cry from operators to welcome nurses, to create career paths for nurses, and dentists who suggestion is that are leaving the NHS and doing private dentistry. That depends on capability as well. So there'll still be an element of core NHS dentists and those who are capable and have the qualifications and have the opportunity to grow private dentistry further. With that experience, they'll do so. I don't think there's not a kind of crystal ball answer to how it's going to be resolved, but I think our market at the moment is incredibly resilient. I think these operators will adapt and make do as best as possible during this time. They're surviving. There's very little impairment in the marketplace, but we hope that pressure comes off those operators soon.
And sorry to focus on the negatives, but if it doesn't get any better, can you see it impacting practice values?
Yeah, I think as a direct result, I think costs within a business will increase. So in order to attract staff and associates, pay scales may increase. So whilst multiples and demand for practices will still be there, what we're multiplying might look different. So the average EBITDA multiple that's achieved at the moment on a practice could stay the same, but the margin of EBITDA that we're multiplying might decrease. The profit margin might go down as costs increase, obviously, and equally that's along with the general cost of living as well. Lab costs, material costs, gas, electricity, the every practice and their movable expenses just now are starting to kind of feel the pinch and a squeeze on every cost that's coming out of the business.
Yeah, absolutely. So there was the EBITDA multiples varied from region to region in the UK, but they were particularly high, or they were higher in the south of England. Why do you feel that demands a higher EBITDA value?
Again, it comes down to recruitment and the opportunity there to see Southeast particularly. It's a hotspot of activity. There's demand there, and generally perceived recruitment being a little bit easier, for example, versus more rural locations or coastal locations, for example. So I think again, demand creates those multiples that we're seeing just now, and that's why.
Okay, and one other thing I noticed is that you have in the review you have more offers than viewings of practices. So how does that add up?
It's a supply and demand formula just now. The practices that we see come to the market will generally receive multiple offers, and that's because the demand's there. On some practices, depending on where it is and the type of practice it is, we can see those offers go into the double numbers, double figures at times. It's incredible. And I think that's where the real focus should be. Yes, there's difficulties in the market. There's a perception of staffing issues, recruitment issues. The NHS is a bit in flux at the moment. The framework needs to be improved. But the fallback position, when we look at it cross-sector, across private and NHS dentistry, is still a very favourable place to be.
Perfect. Okay, thank you, Paul. So for anybody who wants to read the Dental Market Review, where can they access it? Where can they download it from?
Yeah, or directly from our website, www.christie.com. You'll see a dental section there where the report can be downloaded from, or if anyone's having difficulty there for any reason, they can contact me direct via email and I'll ping a copy over.
Perfect. Paul, thank you so much for your time. I really appreciate that. Thank you.
Pleasure. Thank you, Seb.